The Trade Desk and Google are two excellent advertising businesses that have performed relatively well in 2024. But what about for 2025? Which one of these two ad stocks is the better one to buy? That's the question I'm going to answer in this video. Comparing these two giants, well, I shouldn't say two giants. Alphabet is a giant. The Trade Desk is much smaller when compared to Alphabet, although it's large in its own right. Comparing these two across several categories, including revenue, cash flow, operating margin. And then when we get to valuation, I'm going to compare these two on a forward price to earnings basis and on a discounted cash flow valuation basis. I'll share with you my discounted cash flow values for each Trade Desk and Alphabet, and finally come up with the decision and recommendation and rating on which one I think is the better buy for 2025. So let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Starting with revenue growth going back all the way to 2017, we noticed that in the purple, the Trade Desk has delivered better revenue growth compared to Alphabet. And you should expect that given that the Trade Desk is a smaller company gaining market share, while Alphabet is a much larger company still gaining market share, but primarily trying to keep market share is Alphabet's goal, while Trade Desk gaining market share is more of a primary target. They're both operating in the over $1 trillion massive total addressable market of advertising, especially digital advertising, that's expected to grow at roughly close to double digits for the next decade or more. Ad spending is expected to grow between 7 to 8%, depending on the estimates you look at for the next decade. And these are nominal growth numbers. Of course, advertising is a cyclical industry. It can go up and down based on marketers' demand for advertising inventory, but for longer term trendline growth, it's expected to increase. Now, in the latest quarter, the Trade Desk delivered 27% growth, while Alphabet delivered 15% growth. I would expect that the Trade Desk will outperform Alphabet over the next several years at least, over the next 3 years at least, in terms of revenue growth, especially after the Trade Desk launches its connected TV service, the TV operating system, which is expected to launch next year in 2025. And then in 2026, that will be a catalyst to increase growth further. Trade Desk is also in the beginning stages of expanding internationally. Still a relatively small percentage, less than 20% of its revenue comes from markets outside of the United States. And so it's still early stages in that. Alphabet is more mature. Alphabet is trying to defend itself against these large language models like ChatGPT from taking search engine business away from Google Search, which is its dominant revenue and profit generating engine. I suspect Alphabet will do a reasonably good job in defending itself from those models because it has its own model as well that it can incorporate into the search engine business and withstand any form of encroachment from competitors against its position in the industry. When we compare these two on cash flow from operations to sales, they are surprisingly close. You would expect that with Alphabet being the much larger business with larger scale, it would deliver better numbers in terms of these metrics, but it's very close with the Trade Desk, 31% for Alphabet and 27% for Trade Desk. When you look at operating margin, that's where Alphabet really demonstrates its separation, its economies in scale. And one of the reasons why there could be a difference in cash flow and operating margin is that Trade Desk uses significantly more stock-based compensation, which is a non-cash expense compared to Alphabet, which uses less of that as a percentage of overall compensation. An operating margin of 31% is excellent. Trade Desk is improving at 16%, which is strong for its size. And I wouldn't be surprised if over the next few years, the Trade Desk and its operating margin exceeds 20%, especially if that new product, the TV operating system, proves to be reasonably successful in its early days. Now that we've looked at the prospects, let's look at the valuation. So we saw that the trade desk is better at revenue growth. The trade desk was similar in cash flow from operations, and Alphabet was better at operating margins. So you would expect the trade desk being smaller and with a new catalyst coming out in 2025, that it would be trading at a more expensive valuation. And it is. It's trading at more than 3 times the valuation of Alphabet on a forward PE basis. The trade desk is trading at a forward PE of 68, while Alphabet is trading at a forward PE of 22, less than 1/3 the valuation of trade desk. When I look at a cash flow valuation of trade desk, the intrinsic value per share shows me around $50 when the current market price is $132. So an intrinsic value calculation using the discounted cash flows for the trade desk shows me that it is slightly, or I shouldn't say slightly, but it shows me that it's overvalued even after accounting for a margin of safety. A similar calculation for Alphabet shows me an intrinsic value per share of $238 when the market price is $197. So according to this calculation, Alphabet shares look undervalued. So two forms of valuation we've looked at: the forward price to earnings and the discounted cash flow valuation, and both point to the same direction, which is that the trade desk is overvalued compared to Alphabet, comparing their intrinsic values and the forward PE multiples. The next question arises: do I feel that the trade desk has earned this much of a premium valuation over Alphabet? And I would say no, I don't think it has. And so if I had to pick between these two stocks and I had to pick one for 2025, I would pick Alphabet as the better choice between these two excellent businesses. I'm curious to hear your thoughts and your decision making process here against these two stocks. Do you agree that Alphabet is the better buy, or do you think the trade desk and its growth prospects outweigh the better valuation for Alphabet? I like to listen to your comments and respond to your comments in the comments section. So I'm curious, please comment in the section below. Let me know your thoughts. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.